You've got a $160 price target on Apple, so obviously you see a lot of upside ahead. What do you think's been kind of the stall in Apple shares lately?
Thank you for having me on your show. So we believe the stall is more to do with the markets than anything with the fundamentals. As far as the fundamentals go, we see a very, very good path for Apple to continue to do very well as far as revenues, profitability, growth is concerned. Look, the reality is that they are in the middle of a major upgrade cycle with their iPhone platform. And only a third of the iPhones are now 5G. This particular upgrade will continue for the next 2 years. On top of that, you've got the wearables and the services business. And then, of course, as we've written publicly before, Apple is targeting a couple of key markets. It's pretty evident they're trying to become a bigger player in healthcare, which is potentially $1 trillion market for these guys. There's been a lot of talk about Apple Car, which could be another multi-$100 billion market. So that's the kind of stuff that a company like Apple needs to move its needle. And that's exactly what these guys are doing.
Yeah, what's amazing, I mean, Goldman Sachs, by the way, saying that healthcare technology is one of their favorite sector picks in the coming years. That's, by the way, on CNBC Pro. Give them a plug. You know, the thing about services, Harsh, which is amazing, we talked about it on Fast Money last night, is I think the services business is going to come in at what, 50 to 60 billion in sales this year? Whatever the number, their business, their second business of Apple is bigger than the revenues of most other companies in the S&P 500. Do you think services gets the respect it deserves, or does the iPhone sort of overshadow everything?
I think the iPhone does overshadow everything. I think as far as the growth goes, look, the reality is the phones themselves, if you take away the major upgrade cycle, they're not a growth market anymore, which is why you see Apple trying so hard in other services like healthcare, like wearables, like services. Services absolutely does not get the respect, in my opinion. The standalone multiple on that business would be much higher than the multiple that Apple itself would command. And then, of course, there's the wearables business. There is no franchise like the Apple franchise. We've done surveys which suggest that 30+% of the people prefer the iWatch over anything else. And they own the iWatch. 30% of the people plus own the iWatch over anything else. And then, of course, there's the AirPod. And then, you know, as we saw yesterday, Apple keeps pushing the bar just a little bit higher, the focus on privacy, the focus on sharing, the focus on healthcare, and making things easier for developers. So we think on the franchise businesses, Apple is pushing the bar just a little bit higher each year and each season. And then as far as new areas are concerned, we're looking at electronic payments, which is wallet as such. They're, of course, entry into the car. There's a lot that's been talked about there. And then obviously the healthcare angle.
And bottom line, you remain bullish on the stock. 160 target, is that correct, Harsh?
We absolutely love the stock. We think the fundamentals are tremendous. Half the company is iPhones. We're in the middle of a major, powerful upgrade cycle that should last the next 2 years at least. And then there's the possibility of other things such as foldable phones, et cetera, that come into play that some of the rivals are working on.
Shepard Smith here. Thanks for watching CNBC on YouTube.